What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking all about my top 5 large cap gold and silver mining stocks for the upcoming Q3 earnings. Now I wanted to talk about these large cap companies because in my opinion right now, the large cap stocks in terms of the gold and silver mining sector are the best way to play Q3 earnings, just because they're actually probably going to show profits, and they're making a lot of money right now with the elevated price of gold and silver and the fact that they've just been producing gold consistently compared to the exploration stage companies. Now don't get me wrong, guys, I'm super bullish on the exploration stage sector. All the companies that are doing drilling, I really like that sector, and I feel like it actually has more potential than the large cap miners. But if you're looking to play Q3 earnings, I think this could be one of the best ways. Once again, never financial advice, but just my opinion. So guys, let's get straight into this video. These are also your market minutes. It's Friday, it's sunny, so I hope you guys have a fantastic long weekend. Happy Thanksgiving to all my Canadians. I know the American holiday is just around the corner, so we'll wish you happy Thanksgiving when it comes. Anyways, let's get straight into it. And last but not least, before we dive into this video, 2 quick things. If you do support me, the channel, and all the videos, then I kindly ask, the first thing is to explode that like button. It takes just 1 second of your time and it helps my videos so very much, along with if you are a new viewer to the channel, haven't had a chance to subscribe yet, but you appreciate constant steady updates on the markets, a nice flow of new and exciting companies, and you want to learn a little bit more about investing, of course, then don't forget to cash that subscribe button and ring the marquee bell for notifications. And let's get straight into this video. So guys, as I mentioned, it's Friday. We're just going to take a couple comments today. We got a lot of awesome comments, and we got a few more dislikes than normal. We got 8 dislikes, 113 likes. It was all right, but I can't blame you guys. You know, I did switch in terms of my number 1 MJ stock. You guys know I've talked about ACB for a very long time, and what can I say, guys? They just haven't delivered. So am I just going to consistently say ACB is my number 1 stock? I still have some ACB shares, but in my opinion, it's no longer my number 1 stock. And if you base it on performance, goodwill, management, there's just so many things that were wrong with ACB. I'd love to stay true to ACB, but at the same time, at some point in investing, you need to learn when to let it go and move on. So that's just my opinion. So we're only going to pick 3 comments. Like I said, the first comment is from KB1634. What do you think of oil and gas? And, you know, I feel like you might be able to make some money right now in oil and gas if you try to play the recovery. But let's face it, guys, the world is going towards renewable energy. That's where, you know, a lot of the governments want to go. They want to invest in that. They're divesting from the oil and gas sector. And although oil and gas will need to, you know, get the world through the next 10, 20, 30 years or however long it takes us to get off of fossil fuels, it's kind of a dying industry. Now, I'd love to hear your argument for that comment that I just made in the comments. So feel free to drop those comments. If you are oil and gas bull, let me know. I feel like there are a select few companies that will continue to make money, continue to pay dividends, but I'd rather not fight for my returns. I'd rather invest in growing sectors like renewable energy, even utilities. I favor more for dividends as opposed to oil and gas. I'm a little more bullish on gas than I am on oil if we compare the two, but there's also technologies like renewable natural gas, which we will be talking about. A new company on the channel next week. I think it's pretty sure it's next week. It's a very interesting renewable energy gas company. But anyways, guys, that's my opinion on oil and gas. Next comment of the day goes to Europe, PYM. Timestamps, I'd watch you more. We do have timestamps in the description, and I know that right after that subscriber realized that we do have timestamps. So just to refresh your memory, guys, if you want to come to the video, you know my videos are recaps and it's not just a one specific topic. Use the timestamps. You'll find them very thorough. Doc, our editor, does a really great job on that. And last but not least, from the lazy guy, thanks for recommending Afria. I did my own due diligence and very happy. Bought around 450, so congratulations, my friend. And yes, just to reiterate, any stocks I talk about on this channel or in general, just anything I talk about when it comes to stocks, always do your own research and due diligence, not financial advice. And thank you guys for all of the awesome comments. But that's it for today, and let's get straight into the recap and then those 5 gold stocks. And they're 5 pretty interesting companies. We're going to go over where the mines are, their diversity, and how the stock has performed. But I just quickly wanted to update our full access insider members. For anyone who didn't know, we do have a private group. It's full access into our public portfolio, all the trades I make, one weekly video talking all about the new companies that we're potentially going to be working with, behind the scenes look at my investing strategy, along with a monthly report and constant updates, along with being part of our Facebook community. So I will be posting that private video for you guys in that group today. So take a look at our Philexis Insider group, just $10 a month or $100 per year. And now let's get into the market recap. So the NASDAQ, S&P, and the Dow are running like crazy, and it's all over stimulus talks, and we pretty much guessed this. I mean, there's only one way out of this whole thing, and it's just more stimulus. Let's see what's going on with the dollar, and surprise, surprise, the US dollar is down quite substantially today, down 0.58% or 54 points, and we're down to 93.06. So we'll see if the dollar holds on to 93, but as the dollar continues to fall, I believe this will be one of the biggest factors pushing gold. So more stimulus usually means weaker dollar, which usually means higher gold. So how are we going to get over the next, hurdle, the next thing in the economy? Right now, the economy is going through a really interesting time, and I also wanted to take a quick second, even though we're going off topic, I wanted to talk about economic recovery, because we always talk about, a V-shaped recovery, W-shaped recovery, an L-shaped, the dreaded L-shaped recovery, but no one ever talks about something called a K-shaped recovery. So I quickly wanted to talk about that, just as it relates to, stimulus, the dollar, gold. What a K-shaped recovery is when pretty much the economy drops like we saw in March, and then part of it recovers really nicely like we saw, but other parts kind of just don't recover at all. So I feel like there's a much greater possibility of a K-shaped recovery as opposed to, a V, a W, or the dreaded L, because I don't think we're going to get the dreaded L, especially for tech. So let's see what's going on and what's pushing Wall Street. Dow gains as White House reportedly ready to raise stimulus offer. Dow climbed on Friday as stimulus hopes were boosted on reports the White House raised its stimulus offer to $1.8 trillion. That's still short of the Democrats' $2.2 trillion proposal. Now let's see what the president said. I'd like to see a bigger stimulus package than either the Republicans or the Democrats are offering, Trump said. I'd like to see money going to people. So I feel like it should be going to the people most in need. So guys, we're taking a look at two stocks before we dive into all of the gold and silver news. We're going to give you a quick update for the charts and then those 5 companies. So MINDMED is in fact down 12% today, although it's holding above $1 per share, and this is an area where I wanted MINDMED to be, at least trading comfortably over $1. We got that really nice run up to $1.30, although looking at the charts, at least for the 3-month chart, looked like things were getting a little heated. So to be honest, yesterday I was thinking to myself, this thing's got to pull back eventually at some point. But if we look at this uptrend since we've started, guys, it still looks very much intact. Every time we've broken above that uptrend line, it's pulled back, held on, pulled back, and $1, right around $1 right now could potentially be a very interesting time to take a look at MINDMED if this was in fact one stock that you feel like you might have missed out on, because it got away, and it got away pretty fast. So the next company we're taking a look at is TAAT, and TAAT is having a much heftier pullback, but then again, TAAT ran way faster than MINDMED, so I think a pullback was justified, and we can almost still draw that same trend line. Now, I do, however, think that TAAT could maybe pull back a little bit more, but right in this $2 to $2.50 range might be an interesting time to take a look at this company as well. So that's all we're going to say for those two stocks. We need to take a look at gold. Alrighty guys, so in terms of gold and silver, gold's up 2% to 1933, back above that 1900 and that 1920 level. And like I said, I thought it was just a matter of time before we got that next catalyst to drive it, and stimulus was the case. Weaker dollar, surprise, surprise. I'm not very surprised, but it happened and we're here. So the large cap miners are in fact seeing more gains than the smaller cap mining stocks, which pretty much goes along with my theory of large cap stocks right now are going to be the way to play Q3. So silver is up 5.5% to $25.20 per ounce, and it's moved up pretty fast over the last little while, rising from 22 to 25 bucks per ounce. So let's quickly see what Kitco has to say. So gold price has room to move higher, but breakout remains unclear. So after a rocky start, the gold market is heading into a weekend on a strong note, trading near 2-week high with the prospect of more U.S. election turmoil. Market analysts and retail investors see the potential for higher prices next week, according to the latest Kitco Gold survey. So let's see what's going on in terms of sentiment, in terms of Wall Street and Main Street. So Wall Street is way more bullish than last time. 76% bullish, 6% bearish, and 18% neutral, with Main Street now lagging 54% bullish, 27% bearish, and 20% neutral. So it's really nice to see that confidence reinstilled from Wall Street, and we'll see if that translates into more gains next week. This is a really interesting video to watch. We're not going to talk too much about it, but gold price not suppressed by spoofing and manipulation, and here's why, because there's been a lot of talk about this. So manipulation of the markets through spoofing distorts price on a short-term basis, but has very little impact on long-term trends, said Peter Hugg, Global Trading Director at Kitco Metals. Let's just hear what he had to say. So it does distort pricing on a short-term basis, but does it materially hurt a retail investor on a longer trend? If the market is on a downtrend, it will stay in a downtrend. If the market is in an uptrend, it will stay in an uptrend. And that's why, personally, I think we get those volatile swings, especially for the silver market, traders' manipulation. But at this point in the game, we can't fight those underlying factors of, the dollar could potentially get weaker. More stimulus is almost guaranteed for the next little while until we start to get a stronger economy. And that's kind of our only way out of this, along with us inevitably running into, some kind of political tension or geopolitical tension. So that's why I like gold, because I think the trend is continuing higher. So weekly US dollar stimulus hopes drive gold price up 2%. So that's just reiterating what they had to say. And now it's time to get into those 5 companies, guys. So let's talk about the first one. And the first one, of course, is the world's largest gold miner, and that's Newmont Gold Corp. And the large cap ones, in my opinion, right now are in a pretty interesting spot because, 52-week range of 44 to 96. If we take a look at the 6-month chart, Newmont has pulled back a little bit. We've seen highs of 96. We're currently trading at 82. So adding some large cap exposure right now might not be a bad idea. So let's quickly just go over where the mines are. Newmont's got a ton of operations: North America, South America, Africa, Australia. Newmont has a better balance of safe mining jurisdictions than the next company, and they produce millions of ounces of gold per year. And I've talked about that in other videos. We're not going to get to the nitty gritty, but I want to do this kind of like a lightning round just to give you guys 5 solid large cap stocks in the gold and silver mining sector to then go ahead, compare, do your own research and due diligence on these companies. And I can go more in depth in other videos, but I've already done that before. So I just want to reiterate these stocks, in a simple fashion. So in terms of the next company, Barrick Gold, trading for $36 per share. For all of the investors who didn't know, Warren Buffett bought over $500 million worth of this company. $64 billion market cap, lagging Newmont just by $1 billion. So they're head and head. They're fighting for that number 1 spot in terms of the world's largest gold miner by market cap. And Barrick's 52-week range, 17 to 41. Barrick has mines in a few less favorable mining jurisdictions, although their AISC might be a little bit lower, as we can see here, guys. North America, South America, quite a few in Africa, and pretty much all across the world. So you can see all of their mines there. It's always a great idea to take a look at the company and where their mines are if you're comfortable with those mining jurisdictions. Then the third company, and this might be one company whose valuation is a little bit higher, but I feel like investors are starting to, really pay attention to the mining jurisdictions. And Agnico Eagle actually has one of the best exposure to safe mining jurisdictions, or mining jurisdictions, I believe they're called top tier mining jurisdictions. As we can see here, guys, North America, a lot in Canada, and some in Finland. So if you want exposure to very safe mining jurisdictions, I think Agnico Eagle is the best among the 3 gold stocks. Lower market cap of $26 billion, lower production than the big boys, and a little bit higher of a valuation. As you can see, the stock hasn't sold off like Newmont or Barrick has. It's actually held on very steady, and it's just a couple bucks off of its 52-week high. But I do feel like that this will become more and more valuable, having mines in safe mining jurisdictions, and it is one company definitely to take a look at. So that's the 3 for gold. Now let's get into the 2 for silver. And of course, we have to say First Majestic, which is up a nice 7.5% today. I like First Majestic for a couple reasons. Keith Neumeyer is a rock star in the industry. We've interviewed him a couple times on the channel, trying to get him back on the channel. So hopefully in the next month or two. I know he's been doing a lot of traveling, so we're trying to get him back on for an update. His opinion on silver, of course, he's got a triple-digit price target for silver. So always exciting to talk to Keith. And just looking at their mines, you can see they have the San Dimas, the Santa Elena, and the La Encantada mine. These are all in Mexico, so pretty much pure play Mexico, silver miner, but Mexico is one of the world's premier mining jurisdictions for silver, still in North America. So keep that in mind, and a 52-week range of $4.17 to $14.56 on the American side. So the last 3 were on the Canadian side, but also traded on major US exchanges. And then last but not least, and my biggest winner in the silver sector, Fortuna Silver Mines. Fortuna's held on pretty well with a 52-week range of $2.05 to $10.47. We made it back above $9 today, currently trading for $9.11. And Fortuna's an interesting company because they've got a couple mines. Their San Jose mine in Mexico, I believe that's their largest silver producing mine. And then they've got the Cayaloma mine in Peru, which is a decent producing silver mine. And they're working on a new Lindero project, and that is strictly gold, which they should be producing gold on a commercial level, I believe, first or second quarter of 2021. So Fortuna, a little bit less exposure to silver, kind of a mix between the two, but the stocks also performed very well. And those are my top 5, guys. So take a look at those if that is something that you're interested in, along with the large cap stocks being, the pretty much, in my opinion, the best way to play this whole Q3 earnings. So guys, let's quickly recap the charts, and then that's it for the video. So biggest gainers in the day, TGOD, C-Web, and Water in the green by quite a bit. Koyos Beverages, MINDMED, and Harvest won 3 biggest losers on the day. In terms of dividend stocks, we are getting a red day for the dividend sector, except for Brookfield Renewables, RioCan, and Algonquin, 3 biggest gainers. Extendicare, Enbridge, and TD, 3 biggest losers, down 2 to 3%. So not too bad of a red day today. Gold and silver stocks are flying on fire today. Silvercrest, Fortuna, and K92 all in the green, with Kootenay Silver and Bonterra Resources, 2 stocks, the only 2 stocks in the red. Now in terms of technology stocks, boy, it is sunny today. MindMed, EGF, TheraMed, and Virgin Galactic, 3 biggest losers. Amazon, Microsoft, and Tencent Tech rallying today. Oh man. Last but not least, our broader 2020 watch list, JNUG, C-Web, and Kinross Gold Corporation, 3 biggest gainers, with JNUG up over 10%. And Else Nutrition, AMD, and Air Canada, 3 biggest losers, down 4 to 5%. So guys, that's it for the video. Thank you so much for watching. Drop those comments below, and always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.